Good afternoon, everyone. Thank you very much for being here with us today. And I do have a little bit of housekeeping before we start. My name is Alberto Xodo. I'll be your moderator today. And thank you very much for joining this session on Bitcoin and the blockchain. No, I'm kidding. We're talking stainless steel scrap and nickel today, so don't worry. It's actually the spotlight on stainless and nickel that should be happily attending today. And I have to remind you that all ReMA events follow the ReMA's antitrust policy and code of conduct. Copies of the policy are available at your seat or on the ReMA website. Then when you enter the room, your badge was scanned. That's for keeping count of numbers. We are not actually monitoring and tracking you in whatever you do. Mm-hmm. That's something probably Neuralink and Elon Musk will do next year. But please make sure that your cell phone is turned off and set to vibrate. And note that the emergency exits are clearly marked with illuminated signs. Should there be an emergency, you will be directed to exit by the foyer area to the convention center parking lots. Recordings of the session will be available within the next 2 weeks. Visit the ReMA website for more details. These notes are way longer than I remember them, sorry. Use the ReMA app, ReMA Connect. It's your best source of information. And do we have any members of the media joining us today? Yes, thank you very much. And finally, I'd like to thank ReMA's sponsor for their generous support and for being here with us today. Now, I'd like to briefly introduce our panelists today. You can see their names on screen, and you can guess that Calais grew a bit of a beard today. So unfortunately, she couldn't make it, and we have another great speaker instead. So starting from that end, we have David Miller from Cronimet, Brandon Fleischer from Dominion Nickel Alloys, and Attila Widnell from Navigate Commodities. So if David, would you like to give a brief introduction of yourself?
Sure. Good afternoon, everyone. I'm with the Cronimet group here in the U.S. Happy to represent the group and happy to be here today to speak. Thank you, Alberto, for inviting me. We have 7 stainless steel operations. We're headquartered in Aliquippa, Pennsylvania, 7 scrap processing facilities around the country. We also have a terminal in Aliquippa, Pennsylvania on the Ohio River, which is a full service terminal. We have the Cronimet Specialty Group, which is our tungsten and nickel cobalt refining processing facilities. And last but not least, we have United Alloys, which is our aerospace and titanium processing. I've been in the industry for approximately 35 years. Don't let the white hair fool you. It was dark just a couple of days ago. So I'll pass on to
Brandon Fleischer with Dominion Nickel Alloys. We're a stainless processor up in Toronto, Canada. And that's it. That's it for me.
Caught me off guard there. So Attilla Widnell from Navigate Commodities. We're a geospatial data insights company, which is a very pretentious way of saying that we use satellite data to track metals and dry bulk commodities all over the world. What's on the water, what's on land, what the smelters are operating at, using shortwave thermal infrared satellite images. And we piece all of that together to deliver sort of real-time insights in terms of global trade flows and production data.
Perfect. Thank you very much, guys. Let's jump straight into today's topic. And I would like to get your views on what's the demand for stainless steel scrap these days in North America. There's been a lot of turmoil in the last few months, so it'd be good to get the pulse of the situation. David, would you like to start?
Sure. Thankfully, here in the U.S., demand has been fairly steady. The first quarter has been fairly steady. The outlook appears to be fairly steady, maybe slightly lower, according to the, we'll see what happens, obviously, with the economic policies, the tariff policies and whatnot, but it's slightly below last quarter, not quite as robust as first quarter last year, but compared to where stainless demand and supply is around the world, I think we're fairly lucky right now in the U.S.
Okay. Brandon, any views from north of the border?
Well said by Dave. I think the American market is definitely doing quite a bit better than the European market right now, which is struggling quite a bit. But I think it's a difficult market overall. But it's chugging along, but nothing special, nothing brutal is kind of how I'd call it right now in terms of the overall stainless demand.
So I mean, just to caveat my views on anything we talk about today. I'm mainly a ferrous guy, but I'm here because we cover nickel and stainless, so I can't talk with any great expertise like these two chaps. But I guess I'm going to sort of put Dave on the spotlight. I mean, I guess if there's a surplus of material domestically, that's when maybe you look to export cargoes.
Absolutely.
And we, as a sort of monitoring, a spatial monitoring company, we haven't seen any cargoes, deep sea cargoes coming out of North America into Europe for the last few months. I think the last ones were done sort of Q3, Q4 last year. And actually, you're probably bringing more cargoes into the US at the moment. So from a market dynamic perspective, things look sort of status quo.
Yeah. Taking off on what Attila said, obviously everyone in the room knows that the U.S. is usually a net export of stainless. But right now, around the world, there is not a better market. It doesn't make sense, especially with the current policies. It doesn't make sense to export. So to his point, with his tracking software and whatnot, he knows that pretty much the export market is non-existent at the current point.
Awesome. So if you stop exporting, we can make Atilla and his company obsolete.
No.
But no, jokes aside, in terms of specific industries, do you have any views on which sector are driving this demand? Is it the aerospace sector? Is it automotive?
Aerospace, especially on the high nickel side, not so much on the titanium side right now, but on the high nickel side is very strong. The problem there is the tariffs. The supply is very tight because a lot of that material would come in, be imported, and it has caused quite a tightness in that market.
Yeah, he'll know more on that end than I. But yeah, no, agreed. I think that that's strong. I know titanium's going through a lot of weakness right now, but I think that in general, it's stainless is such a mixture of consumer goods, and I think at the end of the day, consumer goods right now are struggling, and it's kind of in the doghouse. But I know nickel alloys are definitely on a different wavelength. So,
and the T word came up already in the panel within about 5 minutes of starting. So let's keep talking about tariffs. I mean, I was hoping we could avoid it for like 10 minutes. But I guess that is what we have to do with at the moment. Earlier this year, there has been a temporary interruption, if I understand correctly, on trade between Canada, Mexico, and the US. And that clearly impacted the stainless steel scrap sector. Do you have any views on the impact of future policies on that? There is no melting capacity for stainless steel neither in Canada nor in Mexico. So it would seem silly to restrict that trade flow into the US. Mm-hmm. But do you have any views that you can share on the specifics?
Yeah, so it looks like stainless scrap should be fine. I know with Canada, it's under the USMCA exempt. From other countries, stainless scrap is exempt from the reciprocal tariff. So it looks like there shouldn't be any issues with that. I mean, who knows? Things could change, but right now it looks like there shouldn't be any scrap issues with tariffs. Obviously, there's issues with new stainless product, but in terms of scrap, I think we're on the other end right now. But there's definitely a lot of uncertainty for a couple months. Canada does not have melting capacity, so if it's not coming to the States, it's got to go, to Europe. And the U.S. does need, they do need the scrap from Canada. It's there's not a surplus of scrap in right now. So
I think the key word there was uncertainty. I mean, it started in February 4th was when the first tariff was rolled out, or the proposed tariff. And what we've found, at least coming out of Mexico, I'll defer to Brandon out of Canada, but out of Mexico, it's created a disruption in the flow. It's more of a start-stop, right? Nobody knows how to react at this point. So every time there's a new announcement that, the 4th of next month, there could be a reenactment. So with the uncertainty, business stops for those 2 weeks until there's another extension. And then it starts again. And then it stops again. So that's really created a disruption out of the Mexico market for sure.
Just add to that. I mean, even on the ferrous side, I mean, as Brandon's saying, flows have continued to come across the border because they're exempt, and not included in tariffs, reciprocal tariffs. But as Dave's saying, just when there are new announcements, and because they're announced so high frequency, it sort of errs on, what was happening during COVID. That policy was changing, not just in America, but all over the world on a high frequency basis. And the announcements were so opaque that even as individuals, we didn't know whether we were coming or going. And I think, when you extrapolate that to business, we're trying to digest and assimilate all this new information. And unfortunately, it doesn't help that some of the announcements aren't particularly sort of transparent or sort of comprehensive enough to understand whether it is or it is not going to impact supply or demand side. So the industry just heads into the freeze until more clarity is provided. I mean, even what was hailed as a huge trade deal between the US and UK, we were sort of left scratching our heads going, is that it? And so there wasn't really much sort of meat on the bones. And so, with our clients, we're sort of left sort of digesting and chewing all the fat and trying to understand what it is to feedback from them and how they should be sort of reacting to those policies. So it's, uncertainty is the killer key.
And I think it's really affecting the CapEx. I mean, the bigger projects, I can't remember the article I read, but it was a survey of CEOs. And, with the uncertainty, the CapEx expenditures is what's really, really, no one knows which direction to go at the moment.
Yeah, your comment on the US-UK trade deal made me smile because we barely have a manufacturing sector in the UK. So it has been hailed as a great victory by both parties, but it wasn't really the biggest trade deal, probably. Not quite a US-China one could be.
Well, just one final point. I mean, looking at utilization rates in the US, just on ferrous, on the steel side, I mean, I think it speaks volumes that sort of utilization rates have hovered between sort of 74, 76, 77%. And I think that speaks volumes about the level of uncertainty in the industry that people aren't, I mean, there's obviously a downstream demand side argument to that as well, which is pretty poor at the moment in the US. But, the mills are unwilling to sort of reluctant to sort of ramp up utilization rates because, one, demand isn't there, but also, no one knows what sort of trade policy is going to be tomorrow, let alone in a month, quarter's time, year's time. So it just comes back to that level of uncertainty as well. If you look back to the first term of this administration, utilization rates, I think, jumped up like sort of 10, 15% within the first 6 months. So that shows you the difference between this current economic climate and the one sort of in the first term.
And that brings us to a very interesting point. Industrial activity is a key generator of stainless steel scrap. How have you seen availability of scrap linked to industrial activity change over the past 3-4 months? Is the market getting tighter? Is there good availability?
You want me to take that one? From most of the people we've talked to, the industrial sector has been pretty steady. I was actually surprised at the steady volume that has been coming out from everyone I've talked to at the trade show, because I would have thought that would have suffered a little. But that doesn't seem to have been the case. So that's a little surprising.
How have you seen it in Canada?
In Canada, it's a little bit different. We're very automotive heavy, manufacturing in Ontario. So there's a lot of uncertainty. A lot of stuff crosses the border, 5-6 times, and gets touched each time. So a lot of uncertainty. I think there definitely has been some level of slowdowns in Canada, but it's not as much as you'd think, weirdly enough, but pretty steady, honestly.
Okay. Well, you'll be relieved to know that a couple of weeks ago there was the meeting of International Nickel Study Group, and they forecast stainless steel production to continue growing for this year and next. On the flip side, they see supply of nickel globally to continue growing slightly faster than global consumption. So their forecast for this year, it's about 200,000 tons of oversupply of nickel metal, which is 20,000 tons more than the oversupply of last year and 30,000 tons more than the oversupply in 2023. So we're talking about 500,000 tons of oversupply over the past 3 years that will need to be absorbed by the industry eventually. And there don't seem to be signs of supply slowing down at the moment. How do you see that impacting, especially on the MPI side, the demand for scrap in North America?
Both of those factors are going to put a cap on, at least on the pricing structure. Obviously, the MPI is the major driver right now. It's the major competitor. It's displacing the traditional inputs, correct? The ferronickel, the cathode, all that has changed in the last several years, but that is probably going to be the main driver. And then the oversupply of the nickel is also going to put a ceiling on where nickel can move to. So I think it's going to keep things in a range.
Mm-hmm. I think when you're making, as a company, for a mill, billions of dollars, it's easy to, be focused on the environment. I think that the business environment has changed a lot in the last couple of years, where now you're seeing European companies start to use nickel pig iron, which was never done before. That was just used to make stainless in Asia. So that's a big change for the stainless industry. And you've seen a majority of mills in Europe utilize it. You haven't seen it in North America yet, but it could change the way that nickel is priced or stainless is priced, because you're going to have to look eventually, potentially, at pricing stainless scrap against a nickel pig iron rather than pure nickel. Because, well, does stainless have anything to do with, a plane engine, nickel in a plane engine, or a battery? So there might be a bit of a differing price structure. And the oversupply, there's a lot of nickel, new mines every day, it seems like, being opened in Indonesia, and that doesn't look like it's stopping anytime soon. So
I think just to add on to that point, and that I think crosses industries, like depending on where margins are, especially on the sort of smelting side, decarb was a great story over the last few years since COVID, but the problem is when margins are under pressure, then the mills will always go to trying to swap out for the lowest cost raw material product to keep things going. It's all about survival. Chinese are very good at doing that. So when margins are under pressure, and this is on the steel side, they'll move to a lower grade ore. So they'll use more 58 versus 62, more 62 versus 58% Fe fines. They'll use more lump versus pellets. And so they will try to slow down the furnace and sort of tighten the sort of downstream market. And I think that's what you're starting to see, because you've had MPI cargoes going into Marcegaglia in the UK. We're seeing them being dropped off in Northern Europe. So I'm assuming that goes to Aperam or Acerinox. And so they're not coming out in huge quantities, but material enough to displace a decent amount of stainless steel scrap consumption. I'll stop there so you can talk about Indonesia.
Well, I mean,
if I may add on as well, nickel is an additive to using scrap. NPI is an alternative to using stainless scrap, if I may just note.
I mean, you mentioned how Chinese firms are very good at swapping inputs and being quite reactive to, actually proactive almost rather than reactive to market conditions. And we have seen that across the nickel supply chain as well. We have seen it that when nickel prices were very high in 2007, they developed new technologies and the Series 200 stainless steel to be able to take advantage of lower grade ore and MPI. We have seen it that when there was a big market dislocation between Class 1 and Class 2 nickel in 2022, they quickly found ways to convert lower grade MPI, MAT, and MHP into metal. And that's something we are seeing. A lot of oversupply of nickel right now is in the form of metal. So we have seen it on LME stocks. We went from a low of just slightly below 40,000 tons in July 2023 to 200,000 tons now, of which 50% come from China. and another 70,000 that are in the system, not on the LME warrants, but just in the same warehouses, but not on warrant. So we are talking a market that is shifted very quickly, new technologies coming very quickly, and the new smelter can reach full production capacity in 12 months these days, starting from class 2 nickel. So, yes.
So I think touching on that and touching on what Brandon was talking about in terms of mines in Indonesia. So part of the technology that we've developed is that we're able to monitor flows within Indonesia from legal and illegal mines to Indonesian smelters. So we track about sort of 25-30% domestic production. The rest is, those are on sort of ocean-going barges within the country, and the rest is slurried, the rest is trucks. But it gives us pretty much a one-to-one sort of correlation with domestic government statistics. So it's a good proxy for domestic production. And what the tracking is telling us at the moment, actually, probably in the last few weeks, is that nickel ore production has fallen off a cliff in Indonesia. And so, it's sort of, the flows are down below some 2024, 2023 levels, which is quite phenomenal. Yeah. But that's not sort of, eventuating in the LME or Shanghai futures price yet. I think that there's two different stories there. One is what's going on in Indonesia in terms of real-time production, and then one is what are the futures the financial markets focused on, and they're very much focused on US trade policy at the moment rather than what's going on in Indo. And I guess we're in a fortunate position because we can see what's going on every 4 hours, and so we know what the trends are doing. I guess that data hasn't come out yet in customs or public association data. And we're seeing a sort of almost mirror image of nickel pig iron deep sea cargoes going from Indo to China. So we can see that falling off a cliff as well.
So just to clarify, you were talking about nickel ore initially, right?
Yeah. Okay. Yeah. And so it's, correct me if I'm wrong, chaps, but nickel ore is sort of captive internally within Indo and then processed into pig iron and then sent up to China in great quantities. And that trade has fallen off a cliff over the last couple of months as well. So you may find that oversupply situation is reversed very, very quickly, depending on what happens with the Chinese processing.
Well, one thing that happened in Indonesia over the last, I don't remember if it was 12 or 18 months ago, he got a new president, Mr. Prabowo. That's,
I live in Singapore.
But that has changed government policy, increased the focus on downstreaming, so bringing downstream industries into the country. So big plans now are being made about bringing more automotive manufacturers to make vehicles in Indonesia. There is a big question on how these policies will change in a world with higher tariffs. But also new big signature projects, like there is a free food vouchers for children program that is being launched by the government. It's like a $30 billion program. And the problem is that to fund it, they have changed the way they charge royalties on commodities to bring more wealth from natural resources to the Indonesian people. That is the government line. So just to rattle out a couple of figures, nickel ore royalties went up from 10% to 14 to 19%, depending on reference prices and grades. MPI from 5 to 7%, so that's not really changed much. But MHP, which is being used to make metal and nickel sulfate for batteries, went from 0 to 2%. Matte from 2% to 3 to 5%. Ferronickel from 2 to between 4 and 6. So we are seeing a lot of royalty increases that are prompting miners to reduce production, or at least threatening to reduce production. And at the same time, the government has also been slower in approving the mining permits. They call them RKAB, RCABs, and they've been much slower approving those. And they talk about a tightening on future approvals. On the flip side, they're still approving HPAL plants and smelters and refineries, and ore will be needed to feed them. So It's a bit difficult to know what to believe, whether they will tighten supply or not. But certainly we hear about tightness in the ore market as smelters are starting to feel the pain.
Yeah. I mean, if I can jump in
sure
first. Yeah, I mean, obviously that speaks to the real-time data that we're tracking in terms of the fall off in production internal flows. It's probably three-pronged. You probably got the situation in terms of the increase in royalties, but I think the mines in Indonesia are fairly profitable, even with the increase in royalties. I think RKBs have been one of the main determinants of slowing down sort of production. And then thirdly, I mean, flows through the first quarter were just, use the word lightly, but insane, like in January and February, March, crazy, just like, considerably higher than Q4. And then the third point being is that they've fallen off the cliff the last few months, and that may also be a function of weather. These nickel ore flows within Indonesia coming from the mines that are not close to the smelter are shipped in a ocean-going barge and pulled by a tug. Obviously, the moisture content of nickel ore is quite high, and so therefore, in Southeast Asia, where I live, in Singapore, we have our sort of rainy season, and that has been quite torrential, and so then you do have sort of liquefaction of the cargo, and then that can lead to capsizing of the barge. So it might be a function of all three or some of those three items. But the interesting thing is that the price doesn't seem to have reacted, or the futures contracts don't seem to have reacted to the fundamentals within Indonesia. And I'm not sure whether that's a lag in the information. But I mean, companies that do mine and trade the commodity, you would think have access to this kind of information already on the ground, like Glencore specifically. So that would be moving the market, but hasn't sort of reacted in any great material measure yet.
Do you think that's because of the lack of believability, that it won't stick?
Say that again?
A believability issue. Not so much a data issue, but a believability issue. So yes, they're restricting, but is there a believability that it will hold?
I don't know. I mean, Glencore. We pitched to Glencore like should have been.
Can we please not talk about specific companies?
Oh, sorry. We pitched to one company, a lot. But I mean, they have more data than you can imagine, shake a stick at. They've got boots on the ground everywhere, and they know what's happening before anyone else. So I'm not quite sure, really. And then there was another point. I mean, obviously, earlier in the year, there was discussions about those sort of annual production quotas anyway, which the market did react to for a period of time. But obviously, certain events, I think, globally have taken precedent now.
And to your point on profitability, from what we hear, the pinch point is on the smelting. So from what we hear, the cost curve has moved up for everyone.
Mm-hmm.
Or it's tight, profitability of smelting is reduced, and some grades are apparently not making much economic sense at the moment. So the conversion to matte is apparently loss-making. MPI and MHP are still profitable, but the conversion into metal is getting to a range where it may not be convenient to convert into metal anymore. So,
I mean, you've had that company I won't name the company, but in North Morali Business Park that was, sort of supposedly running out of funds from the Chinese parent company.
Well, we have seen a number of closures in the West and in Asia as well, actually, across different grades. We have seen the decisions of BHP to interrupt production for the next 3 years that we reassess in 2027, if I remember correctly. We have seen ferronickel projects closing pretty much all over the world. Japanese ferronickel production went down to 0, I believe. We are seeing Ambatovi being put under review, which being an important maker of briquettes could have a big impact on the briquettes market, given that BHP is not active anymore.
Thought we weren't supposed to be talking about company names. Anyway.
Stop talking about. It's public information. I mean, it's on the newspapers. But yeah, we've seen a number of closures, and Anglo American sold to the Chinese. again, public information, but which means it's very difficult to find a non-China, non-Indonesian material in the market these days, considering Russian nickel is not under sanctions. But if companies are avoiding to buy Russian nickel, it's difficult to find alternatives that are not Chinese or Indonesian. Well, which brings us to the US market again.
All right.
Which is quite interesting how it's potentially going to become insulated from some of these trends in Class 1, and how that could protect the domestic stainless scrap industry, because if it becomes more difficult to import Class 1 inputs. And however, we still have the IRA as well, the Inflation Reduction Act, with its incentives on certain materials, which has been very important for nickel demand over the last couple of years for the battery industry. So that's going to be an interesting area for developments to keep an eye on, whether it will stay or not. I don't know if there are any views on that sector, or
the EV market.
Comment. Shall we ask the audience, actually? How many of you own an electric vehicle? Can you raise your hands? Not very many, let's say 10, more or less. How many of you plan to buy an electric vehicle over the next year? Okay, 1, 2, 3, 4, 5. Okay. How many of you planned to buy an electric vehicle over the last to buy an electric vehicle next year, but have now changed their minds? Has there been any mind change? No. Okay, fine. Still, we are very far away from a 50% penetration that people were talking about 5 years ago.
I think the interesting thing there would be too, maybe what areas of the country are we speaking of?
Okay.
Right? I'm in the Houston market. You see some EVs, but you see a lot more pickups than you see EVs.
Actually, I had a big shock in Houston in January. I saw my first Cybertruck, and then I saw another one, and another one, and another one.
You do see some Cybertrucks.
Yeah. Well, that's stainless.
Are all the Cybertrucks of America in Houston?
There's a few.
There were a lot.
There's a few. But it's an infrastructure problem. I know, just speak specifically for Texas. I mean, the grid, we have problems now with the electrical grid, and the charging station availability isn't so strong. And just this past weekend, I was at a restaurant with my wife, and they had EV parking spaces, but the charging stations were out of order. So I don't know what you do if you have an EV vehicle. So
I just don't think the demand is where people expected it to be. I mean, look at Canada as a good example. The government pushed and pushed and pushed these companies to retool their factories to make EVs rather than gas-powered vehicles. And you have a big Ford plant in just outside of Toronto. They started retooling. Halfway through retooling, they realized, wait, no one wants these, and now it's sitting idle. And now they're looking. I want to say it's going to be a minimum of 3 years until they make another car out of there. Not because that's how long it takes for the retooling, but no, there's no demand for it. I think people kind of got a bit ahead of themselves in that sense, and I think it's going to be slower than people expected that transition, I guess.
Yeah. And I mean, that's fair enough. I think electric vehicles and batteries in the nickel story have been the big disappointment of the last 3 years. So they were expected to drive demand to make up 50% of nickel demand, from 2% to 50% within 15 years. I think they settled at 7 or 8% right now.
A little behind target.
Yeah. Well, I mean, they still have 10 years to go. It'll pick up very quick, maybe. Right. But what we're seeing in Europe is a lot of Chinese companies are setting up shops in the most central areas of cities. BYD and Polaris, a lot of Chinese companies are trying to penetrate European markets, making affordable EVs, and the new technology changes, by the way, are pretty impressive. 500 kilometers charge, which is 400 something miles in 5 minutes. So that's been announced 480 kilometers was announced by BYD, and someone else announced, Cattle announced 520 kilometers in 5 minutes. So it could be game changing, especially in Europe where cities are closer to each other and shorter distances.
That's one of the major problems in the U.S. is the distances. When you're talking European versus, many people in areas of the country drive large distances. Yeah.
Then the flip side is disappointing demand for nickel from electric vehicles has probably helped keeping prices low over the last couple of years, yes, which has fought off the challenge of engineering out nickel from batteries. Right. So you hear a lot less talk of batteries using no nickel because it's not as expensive as it used to be, which could be in longer term be a driver of demand again, simply because if it's more affordable, it's more likely to be used. So silver lining for the nickel industry, I guess.
Well, that's the issue, though, and it's same with stainless. Is the higher nickel goes, the more people look at alternatives, right? When nickel goes, if nickel's above $10 or $11, you're going to see a lot more 201 and 301 made as opposed to 304. You're going to see people trying to use more ferritic where they can. And at the end of the day, as nickel gets more expensive, people look for cheaper alternatives, right? And not to say that, there's some things that will always be stainless, but there's stainless with lower nickel. And you see out of China, for example, I can't tell you how many times we see it's a 201, it has 2% nickel. They always seem to get lower and lower and lower nickel as the markets rise.
Well, they do say the best cure for high prices or low prices is the market. Yeah. So what do you see as the biggest challenges for the industry over the next couple of years? And don't talk about tariffs and trade war.
Pretty much it's going to come down to who can adapt and who can be flexible. Mm-hmm. I think that's going to be two of the keys for a lot of the reasons that we've already talked about. The other thing, and I think there was another seminar, so I don't want to step on the seminar, but it's already happened. How do we attract, train, and retain good people? I mean, I know when we're trying to hire, when we're looking for people, it's that is a major issue in the industry, I believe. So we're working on that as a group. How can we bring in young, bright people and retain them? I think that's going to be a key over the next few years.
Brendan, what's your
view? We'll see.
As a young, bright person in the industry.
Yes, I don't know about that, but we'll see.
That was my pitch to get Brandon on our team.
So it's the markets are difficult right now for any melter of stainless steel. Where no matter where you are in the world, I think things are going to have to get a little bit worse before they get better, for especially guys in Europe and the USA, because they're not making money. And if you're not making money, you need to find a way to reduce costs, because if you can't raise your prices, you got to reduce your input costs, right? And I think that's where they're going to have to figure out to go in order to become profitable, and then increase their order books and then increase everything. But right now you're in a very tough position, the stainless steel industry, where nobody's making money and they can't seem to figure out a way to, you can't raise prices because then you can't sell anything, and you can't, there's pressure on reducing raw material prices. So I think it's a very difficult place to be right now for a, stainless mill. And you've got, there can be a case to be made that you have an overcapacity in Europe. And it's, there's always pressure, and I'd say this is more a European problem, but there's a lot of pressure from China, like a lot of pressure from China. And that's going to be, I think, the biggest issue is over the next couple of years.
Yeah, man. Perfect answer. And I think the solution to that is what we're already seeing in the steel industry, right? So not tariffs, I won't use the T word, but more protectionist policies. So we're already seeing that happen, not en masse, but the theme has become mainstream with, Vietnam, South Korea, India placing safeguarding and anti-dumping duties on Chinese origin steel. So I mean, obviously, I don't know the stainless sector as well, but if that is the situation in Europe, one company in Italy has been off, and I think the one in Spain is sort of stop-start. And so if that is the situation, the solution potentially is sort of embargoing imports of cheaper material or cheaper raw materials, so that it can protect that industry and help it to reinflate and expand. It's really no different to what we saw in steel back in 2015, 2016. So that forced China to address overcapacity issues within the steel sector. And so, they removed 100 million tons worth of induction furnace capacity over a period of 12 to 18 months, and the sort of market rebalanced. And from exporting 112, 113 million tons of steel, came back down to more normal levels of 60 to 68 million tons, I think it was. So China, this time round, China actually does acknowledge, through its various associations like China and Steel Association, the NDRC, the MIIT, they acknowledge there's an overcapacity issue. Problem is, you're herding cats in China. So, and the problem is this time versus last time is that actually, I don't know about stainless, but the steel mills are actually earning money. So they're not dumping in a sort of academic context. They're still generating, modest sort of profit. And they're generating better margin from the seaborne market, which is why you're seeing those sort of volumes come out. But I guess the lever will be the more countries that apply ADDs or protectionist policies will then force sort of China's hand to mandate those capacity reductions, and then that will rebalance. But unfortunately, as Brandon quite rightly said, it could get worse before it gets better, because trying to sort of organize hundreds of mills across a huge country is no easy feat. And the only way that they managed it 10 years ago was physically sending out inspection teams, supervisory teams to manage and oversee the physical destruction of those facilities, so that they could never come back online again. So they have learned from the past, but the problem is, as Alberto said, the market sets the price, and if they're profitable, who would volunteer to close down their plant? It's so given their sort of regime, the steel industry in China is very sort of capitalistic, and it's driven by price. So I can't see anyone sort of volunteering to close down their mills at this point in time. So it will have to be physically driven by the government and to overhaul that industry. But problem is, when they're still earning money, it's unlikely to happen anytime soon.
Well, on the stainless steel side, though, we hear the situation is slightly different, because they're not quite so profitable anymore because of higher MPI costs, tighter ore, potentially higher costs going forward as well, and an incapability to raise price domestically because demand is weak in China. We hear there are stainless steel mills that are suffering. Maybe not the fully integrated guys that go mine to hot strip, but the more independent ones, which are more exposed to market forces and have higher costs. I'm not saying they're underwater, but they're certainly facing a pressure they weren't facing last year. So it's going to be interesting to see how that develops over the next couple of years. And in terms of non-tariff trade restrictions, my favorite one, CBAM, is coming to Europe. So I believe nickel is going to be included from 2027. And it's going to be very interesting to see, one, if companies will be prepared for all the reporting requirements that it implies. I've been in a number of meetings with carbon steel associations that are going to be impacted from next year and the year after from UK CBAM. And the level of preparedness goes from arrogant, I'm going to be fine, to we have no idea what that is. So, yeah, it's going to be interesting to see what happens next year, because one big difference between Western-produced nickel and Chinese nickel on class 1 is carbon footprint. So if the Chinese nickel is made from MPI or matte, it can have a carbon footprint that could be 20 times higher than that of the cleanest Western producers. So we're talking 100, 120 tons of CO2 versus 4 or 8 tons of CO2. If they get taxed at the border, it does massively increase the cost of the imports. So
I think an issue is, and you're already seeing now, there are some mills in Europe importing slab from China and just re-rolling that because the melting cost is just so high. So I think the problem is, you're kind of helping, but at the end of the day, if the costs to melt are now even higher, you could see guys just saying, you know what, we're going to get rid of the melt shop and we'll just roll Chinese slab. That's the kind of, the potential issue.
Well, the beauty of CBAM is forget the melt shop. Finished goods are not covered. So you can close the melt shop, you can close the rolling mill, you can close the stockist and just make your washing machine in Vietnam.
Right.
Yeah.
And that will not have any carbon duties attached. So, well, I'm sure they'll find a solution for that, but it would be pretty ironic if that's what happens at the end. I think we got to address the elephant in the room here. Is hi, I work for the London Metal Exchange. There has been a bit of a crisis a couple of years ago, but things are better now. So actually 2 years ago, I raised my hand. I was in the audience and I said, if anyone has questions, I'm here. Don't throw objects. Don't hurt me, but I'm here. Now I haven't seen anyone throwing something at me, so I think you're less angry. So, Brandon, what do you think about the LME and its nickel contract these days?
Well, I think it's gone a lot better. I mean, we were just chatting about this yesterday, which was very insightful. You said that trading levels are kind of at regular, pre-crisis levels, I guess you could say. I mean, yeah, it got pretty crazy there a couple of years ago. I think right now it's the bigger trading volume is a lot better because it keeps it more in line. Like, I think there was kind of a lot more volatility when the trading levels were lower, which is not, in my opinion, not the greatest thing. And I think that's kind of brought a lot more stability to the nickel pricing. I think,
So you're still using the LME?
Huh?
Still using the LME?
Oh, yeah.
Yes. How about you, David?
Yes. Yeah. The LME is a staple. There for a while, it got a little wild. We can't ignore that, but
that's an understatement. Very briefly for you.
Yeah, I mean, it still uses a mechanism for hedging positions. For we have a department, and as well as most of the major companies, right? We have a treasury department that uses the LME for hedging and whatnot.
Okay. So. And is the industry back to indexing to the LME? It's a stainless steel scrap, or have we moved to other pricing formulas, fixed prices? And from your look, I don't like the answer that you're going to say.
It's still an indicator, but still, I mean, obviously the MPI is a major factor. Mm-hmm. The LME is referenced daily, of course. Everyone has it on their phones. Everyone has the information. Every time the LME moves, somebody's going, "Oh, the LME went up $10. Have you raised your price?" No one calls me when it goes down $10. But yeah, it's still used throughout the industry.
Okay, perfect.
If I may add in, I think that the LME will always be used in terms of pricing on a especially a mill level. But I think what will definitely change is, when things go crazy, you may never see, stainless get priced at 85, 90, 80% again, if you've got NPI available at 60%, for example, right? If you could say, I don't know the correct number on NPI, but let's just say it's 60%, maybe if scrap gets to 67, it's fine. But, if you get to 75, call it, the mills might say, well, if we don't reduce our price, we'll bring in a few boatloads of NPI and use that. So I think it'll change the way stainless mills price their material, but it won't change who knows? I think the LME will be used for a long time.
Well, the industry changing has been a constant for nickel over the past 20 years. I remember when I joined my first meeting of the nickel committee at the LME, the person that was there before me told me was the vice chair of the committee actually at the time. He told me a very simple truth. Nickel is the easiest market because by next quarter it will move 30%. You just have to guess whether it goes up or down. Mm-hmm. If you can guess the direction, you'll make money, but it's the easiest market because it always moves.
Yes.
So, yeah, volatility and change have been a constant in this industry for the past 2 decades. So, shall we open the floor to questions from the audience? if there is anyone still awake, by the way. Come on, guys, we cannot have covered everything you want. Oh, one of them. So carbon steel is going live. Yeah. So for carbon steel, it's going live in at the end of this year, early next year. In the UK, it's going live 1 year after. But then other metals are going to come in later on. I think nickel is 2027. Yeah. It is, though there have been big discussions with trade associations asking for delays or cancellations. But the latest I heard is it's moving forward as planned. And actually, there have been talks in the UK to move the UK start earlier so that companies can only have one set of rules across UK and Europe. But I think the government is sticking with let the Europeans mess it up, and then we'll learn from their mistakes.
I didn't catch the question.
The executive order was signed last month
on critical raw materials.
How does that impact Section 232?
I'm not sure, to be quite honest with you.
Yeah. So, if I may,
Sure.
I mean, the U.S. needs to import nickel. There's not much at all produced within the country. I know there's tariffs on a lot of things, but, if you look at the fine print, there are a lot of exemptions. And generally, there's a lot of things put in a tariff, and then there's a big list of exemptions. Like, for example, for a lot of the ferroalloys that are not produced in the United States, those are exempt from the tariffs. And I think nickel would be the same. I mean, I can't imagine why, a nickel mine, we're not in Indonesia. It doesn't take 12 months to open in the United States or Canada. So I think that just will have to be something they'll have to exempt unless they want to pay 10 or 25 or whatever % more for nickel than the rest of the world.
And actually, on American supply, it's unfortunate Calais Long was not able to join us because she's the CEO of Westwind Elements, who are opening a nickel refinery in Oklahoma, the first class 1 nickel refinery in the United States in decades, probably.
Yeah,
so
I think it's been like 40
good.
years. Right?
Yeah. So it would have been good to get, probably before she was born.
Probably.
I think she was on the Forbes 30 under 30 for energy recently. So,
yes.
But that would have been good to have her answer this specific question.
Just to add on, I mean, not talking about nickel per se in terms of your question, but what you tend to find that has happened with tariffs and so on, is that you end up having a tiered pricing structure. So much so, in fact, if you look at, I keep on bringing it back to steel, but if you look at HRC prices, right, even with 25% tariff, it still makes sense to import material from Asia because it's still competitive, even those rates when HRC is pricing at $1,000 a ton. So it just depends on the S&D for that particular vertical, and if it makes sense to still import it, if the price is adjusted accordingly, and you can still source it.
Hi. So I wanted to ask with regards to industrial policy, whether that's just from the U.S. administration or others in Europe, Canada, and the like. Have there been any efforts outside of just the tariffs to actually build out like the reindustrialization efforts? I know David mentioned that, for example, we lack technicians, but then if we're not training those technicians, then how are we supposed to fill that void when we have increased plants? Are plants being offered specific grants or mills? And how are we supposed to fix like some of this reindustrialization effort if there's no broader policy to complement the tariffs themselves?
It's a great question. I don't know on the federal level, but I know at the state level, we're working within some of the states we operate in. There is some state money available for some of these programs. I know within Pennsylvania, there's some state money available. We're looking at it in certain areas. So I'm not sure what the overall federal policy will be, but I think from a state level, you can go to, I'm not sure what states you're operating in, but check with your state legislatures, your state programs.
Okay.
There is some money available there.
And are we seeing any policy coming out of Europe in terms of trying to reindustrialize? or is it just adapting to the tariffs that U.S. puts and removes as goes?
Well,
I don't think there's much money in Europe at the moment.
There have been some policies, some pots of money made available in Europe, for example, post-COVID, like sorry, don't recall the name now. But there has been a lot of money flowing around Europe to support, for example, investment in clean energy and the development of labor skills in those sectors. The upcoming plans for defense spending, they are talking of financing them with the European level bond, as it was done for some of the programs during COVID. And that may support industrial policy around Europe, building more factories or investing in the Ukrainian defense sector, where a lot of skills are being developed very quickly. So there certainly is something, but not sure there is a level of coordination that is what you would expect.
So I think more importantly at the moment, just, looking at economic climate everywhere, just demand is terrible. There are very few countries at the moment that are sort of really experiencing, surging growth. Probably talk about maybe just Vietnam and India as like probably the two highlights of the world at the moment, but nowhere's on fire, and nowhere's really growing much. Europe's struggling terribly. And I think, having tariffs and protectionist trade policies is one item to protect your economy from cheaper imports, but then also there needs to be policy on the demand side as well to sort of instigate that demand growth. And at the moment, that's been lacking everywhere, even in China. So they may be cutting reserve requirement ratios and interest rates, but the consumer confidence is not there to spur demand. And so, that's why industrial metals in China have been sort of slowly tracking down. I mean, they're surging over last week just purely because of trade negotiations. But at the end of the day, once that's finished and that's put aside, the reality of the situation is that the real estate sector in China is terrible. Property construction is awful. So it's going to continue its downward trend. So I mean, there really needs to be we're creating these isolated markets. Governments need to start looking after their own demand profiles and sort of injecting money in it. But the problem is there's no money to spend. It's probably apart from the US.
Well, and the fact that if you overdo it even a little bit, it becomes inflationary very, very quick.
But then tariffs are inflationary as well. You're damned if you do. Damned
which is something you may not want in a tariffs world.
Yeah. Consumer confidence is an issue in the States also. Nobody really knows where the current administration is going. So to your point, it's I don't think there's a cohesive policy at this point.
But then consumer confidence is a funny thing. I remember being in Düsseldorf a couple of years ago, and every metal trader I met with was desperate. The energy crisis, we are going to shut down factories, the world is coming to an end. And then I walk outside of the offices of the last trader I met, which was on the last floor of a department store. So I walk in front of the department store, and there are 20 people queuing up for Louis Vuitton. And there are another 10 people in line for Prada outside the shop waiting to get in. I was like, it's slightly different from the view of the metal traders upstairs. Consumer confidence was fully there for luxury goods, not for steel scrap or beams, billets or whatever, but
comes to priorities, right?
Well, I guess we are done for today. Slightly early, so hope no one minds grabbing a coffee. I would like to thank you again all for participating today. Please don't forget to complete the evaluation form that will be emailed to you on Friday. So that's going to be the highlight of your weekend, the evaluation form, so don't forget. And your feedback is really going to be important to make sure next year's session is even better than this year's. And a big thank you to our speakers today. Thank you, guys.